Hello, happy 2024. I am going to start this week by looking at FX and some commodities. We'll look at gold and silver, which are at really interesting levels, and oil. So Peter Brandt has written before a really good paper on the January effect in Eurodollar, which is how the Eurodollar tends to make a high or a low the first week of January, which lasts for usually at least 3 months, and that was certainly true if we take a look at Eurodollar last year. Let's go to the weekly chart here, and we can see at the beginning of here's the beginning of 2023. This was the low that we made down here, 2nd of January, that week, first week. You can see we pulled all the way back to almost retest that low in March, but that actually was the low that lasted all the way until the end of September, October in Eurodollar. So that January effect is really strong. What I'm looking for this week though, and let's talk about where we are and if we're going to get that January effect again in these currencies, because the Eurodollar is obviously 57% of the dollar index. So what the Eurodollar does is really interesting for the dollar index. And so much priced at the moment in dollars means a big deal for commodities. Now, I put my fib retrace levels from the high that we made in July to the low that we made in October, which kind of basically covers the whole of last year's range. If we look at it this way, we kind of made a little bit of a broadening, potentially, a broadening kind of wedge pattern here in the Eurodollar, and so this was the whole of the range of last year, if you like, and we are inside of it still. Let's see which way we go next. Now, if this is a broadening wedge, we'll see a pullback and obviously continue higher, but there is so much uncertainty and so much going on in the world, and quite an interesting effect of de-dollarization, I think, with world events. Now here, at the moment, we've a really sharp move today to start as we head into the open in dollar strength. So from the high that we made in July to the low that we made in October, we reversed at a 786 fib level. It's really clear on the weekly that we couldn't close above it. In terms of candlesticks, a bearish reversal here. When you have a strong up candle and then a doji and on the third candle, you have a candle that closes more than 50% down on your big up thrust candle. That is a bearish reversal pattern, and if you Google Morningstar or evening doji star reversal, you'll see it. So that would be a bearish reversal pattern if we close the week more than 50% down on this green candle. Also, when you reverse at a 786 fib level, which we just have, if you close underneath the 61.8 level, which would be 1.095 here in the Eurodollar, your target, the first target, is back to the 38.2. And sometimes you can do a whole nother big 3-wave measured move lower. And if we were to go to the second target, in other words, we measure from this high, project to low, project it from here, the second target then is down here at 1.0628, which probably would line up with a back test of this 236 fib level. Yeah, so 1.0628 is the second target if we close and hold underneath 1.095. Very nice swing trade, and that move really could last us, I could see it lasting us into March and this high holding. But my only other caution with this is, when you see a really strong move ahead of the US Open, particularly if it involves a US market like the dollar or US stocks, then quite often gets reversed after the open. It's a little bit of a gift trade, and here we are. Really key then support at 1.0959, daily 20 moving average, which has previously been pretty good support, and so I'm watching what happens here. And if we go and look at what we did last year on the open, you can see that this was the high here in January, and for the first, really the first week, we didn't actually make bottom and make the turn until Friday, and so it's not, whilst I think in stock indexes you quite often on the first day get a kind of indication of how the year's going to go, sometimes it takes the first week to kind of settle down. And so I remember when I was at a hedge fund, I was always told, you know, be careful, don't, you know, be careful, you know, at the beginning of the year you kind of get the reset button and your account resets, and it's really easy to kind of rush into trades and rush into ideas before the kind of trend establishes. And so this is one of those times I would say be careful, because as we head into the open, potentially this is support, and it may be that dollar strength is not the theme, you know, that we see continuing. This is just a little bit of a setup move, if you like. And this dollar weakness we are seeing across the board in the Aussie, which I have been quite bullish in. The Aussie dollar, remember, is very correlated with stocks. Strong stock moves usually means strong Aussie moves. Now here, if I put my fibs again from last year's high in February 2023 to the low that we made in October, here we are at a big 618 fib level, 0.681, interestingly, in terms of price. From this high, last year's high to low, then we've retraced to the 618 fib level. That means that we are quite likely here, because these fib levels have been pretty, well, certainly the 50% here in the middle, not so well respected, but pretty good. That would mean for me a pullback here to start the year would mean a pullback to the 50% level, and underneath it, second target would be the 38.2, and we'll do that golden ratio zone thing down to 0.66. If I flip the fibs, we'll go the other way. So we'll go from the low in October 2022 to this high. For me, this fib pattern is a little bit more bullish. Now, that's because we reversed at the Aussie's favourite fib, which is the 886 fib level. And when you do that, normally you have two targets. You have the first target would be this 50% level here in the middle, 0.666. And your second target is a little bit higher at this 0.23 fib level. Now, at the moment, if we argue that these fib levels are being respected, then we're holding above potentially one here. So 0.678 then becomes key support and last week's low. So let's go back to the daily and put this on the other way. We can say that quite likely we're done going up if we close this week or today at least underneath 0.678. And if we hold 0.678, we've got more upside to come. And this is just a start to kind of set up move. So that's how I'm looking at. I'm just going to go back to this way here. So that kind of gives us our support and resistance levels. For me, in terms of a fib trader, then that's what I'm looking at. Key support. And if we look at this here on the 4-hour, potentially this is a bit of a 4-hour head and shoulders pattern. If we break it, we are likely to come back much further, and that would be the bearish reversal that we're looking for. But this is neckline, it could be a little bit tricky here, and so that's how I'm looking at the Aussie. In terms of crosses, this Aussie yen is quite interesting, but Japan is closed for a couple of days. We don't always get the best trade ideas. So my bullish idea here would be, look, we're holding very nicely at this weekly 50 moving average, which previously in July last summer was really good support and has not been amazing. Sometimes we can wash back and forward. So potentially this is a bullish reversal here and a pullback to these weekly moving averages. However, every way I measure it in terms of fib retraces, my support's a little bit lower. Normally when you see 5 waves up like this, your big retrace would be back to this previous swing low. And if I put my fibs on from this low to high, that's also down back where our 50% retrace is of this whole rally at 139.56. So although the dollar looks strong here at the moment, I would argue that we haven't actually confirmed this reversal at this weekly 50 moving average, and I wouldn't rule out a dip a little bit further, but potentially before we bottom. And then, you know, then we could argue that if we look here at the week, the monthly 20 moving average coming up, but if we break and hold underneath this weekly 50 moving average, normally you see a lot bigger loss, and so potentially we are headed further lower. So it's one of those weeks, especially with Japan closed. Let's wait a couple of days before we see which way the trend is going to go in the dollar. The pound is also quite interesting. Pound had some pretty good data this morning, led to pound weakness though and big dollar strength. Now if we look at big fib levels here in the pound, this is a very messy 61.8 fib, but I kind of don't like relying on it when I look at it like this. But in a lot of these currencies, I feel like the move lower that we saw in them from the summer, so here was a big swing lower to a 38.2 fib, and in this it really kind of looks like one trendy swing, doesn't it? There wasn't any clear three-wave move here. And so for me in the pound, it kind of makes me think maybe this is our first swing lower, this is a rally, and we could see another swing lower from here. And as you know, one of my favorite trade setup or ideas is a three-wave retrace back to the 50% level, which would give us a target down here at 137. And I measure from this high to this low, project it from here. That's also 117, around where our equal measured move would be if we head lower from here. Now obviously when we look at the moving averages, we've got a lot of support we need to break down. We've only just flipped this into an uptrend, but if we break these you know, for me on the downside, my first target would be these previous lows in the middle here around 125 and the daily 200 moving average. But if we head underneath that, I think we're headed to 121 and potentially down to 117, and we could see more dollar strength. Now don't want to, again, if we look at 4 hour, you know, potentially we're headed into support. That's the bearish argument. However, if we talk about what the bullish argument would be as we head into the US Open, here we are at the 4 hour 200 moving average, previously pretty good support and resistance. It looks like we've made a three-wave correction. Here on the short term, we'll look at it on the hourly, it's even clearer. And so potentially this is just a shakeout move ahead of the open, and certainly not a great place to sell yet. There we are, exactly an equal measured move. Look, from this high to low, 126.35. So pretty key support here, and I would say that we are making a bullish reversal and going to continue high. For me, you know, when you actually, let's put that back on, above this 61.8 level normally confirms the reversal. That's 1.268. So that would be pretty bullish for this pound, back above 1.268. So let's see what happens to this on the open. Remember, sometimes in these currencies it takes a couple of days for the kind of next trend to reveal itself. Not everywhere in Europe is open today. I think Switzerland is still closed as well. Japan's still closed. And sometimes it takes a day or two before you ease back in. I don't think I've drawn that quite right. There we go. 126.31 is the equal measured move level. If we hold that, that is pretty bullish for the pound. Okay, let's take a look at silver and gold, and I'm going to start with gold because for me this is a really interesting chart. Now, when we looked at gold before, and we had this breakout, so we had these really interesting highs that go all the way back to August 2020, and we had a false breakout above them at the beginning of December, and we wondered, was it a false breakout or was it going to keep going? And the key thing I thought would be what would happen when we retested this really important resistance level, because we dropped back underneath it and potentially we could see another swing lower from here. And this 2075 level for me is key. Well, here you can see on the daily we are retesting it and we're kind of holding underneath it. It looks a bit clearer on the weekly. And so I think if we're going to be going up from here, we kind of really need to get above this 2075 level and hold above it. And potentially, you know, if you wanted to sell this, if we're going to, especially if we're going to see dollar strength, then we will see some weakness in gold. And that's what I'm watching out for. Now, gold, very like a lot of other markets, does have a little bit of a January effect, but the biggest effect is in the dollar. If we go back to previously as the start of the year, for example, this was the January spike candle. Again, false break higher and then a nasty reversal that lasted to March. If we look at 2023 here was, we spent a week trying to making a base here, went very sideways, but the second week, the low we made, again, lasted well past March into April. So actually the high was March. So there is quite a, Peter Brandt is right, there is quite a strong January effect, and that's what I'm looking at in 2075. I wouldn't be surprised if we saw another leg lower in gold from here, but it is going to depend what the dollar does. And if we do see strong dollar, silver is very sensitive to a strong dollar. Now, if we look at where we are in silver, potentially we're at a pretty good bounce level. We pull back into our daily moving averages, daily 200 moving average. This is a very nice, so from the low that we made in December to the high, low high, very nice 50% retrace, big strong daily moving averages, kind of a really nice long setup. We look at it on the 4-hour, potentially a very nice 3-wave measured move. However, this is key resistance for me. 50%, you know, when you do markets and 50%, 50%, so on, is very corrective pattern. And so this 50% level here in the middle, having pulled back 50%, is key resistance at 24.08. I would only be bullish for more upside and another swing higher above that. Otherwise, I actually think against 24.08, this is a little bit of a sell level, but it's coiling up as we have indecision. Because when you have these 50% retrace levels, they kind of tend to keep working. So we've had this pullback in silver here. No prizes for where it came back to, 50%. So here we are back in the middle of this, even on a 15-minute swing. 50% level here. This is classic coiling up. And I don't know which way it's going to break out. But I really think it's going to be about what the dollar does after the US Open. Yeah, you know, whenever you see flat moving averages or coiling up sideways, it sets you up for a bigger breakout. But that's what I'm watching for in silver. Oil, very interesting. As you know, we were looking, this is a weekly chart of oil front month US crude. And in this, we are holding very nicely onto this key weekly 200 week moving average. It was support all year. This was us testing it in March. This was us testing it in May. Here we tested it again in June and July. It held, and then it held when we tested it in December. So a break and hold underneath this weekly 200 moving average for me would be a bit of a bearish reversal. And also we have got this potentially head and shoulders pattern. I don't mind the sloping neckline slightly higher. So that for me is a bearish pattern if we break down. However, head and shoulders pattern quite often fail when they're just, you're looking at an ABC. And if we are looking at this move lower that we made in oil from the high in March in 2022, 2 years ago, it looks to me like we made 5 waves down, and potentially this is just the first swing in a bigger correction. Now, as I know I say it all the time, my favorite pattern is an equal measured move back to a 50% retrace, and in oil that's kind of around this $100 price, which markets like big round numbers. In the second month out, it's definitely $99, 99.9 I think. So I would not be surprised at all here if we did one of those kind of equal measured moves. If we higher up here, equal measure move is at 99. So I would say if oil continues to bounce here, those are my targets. Kind of retest of $100, it'll fall just short, and potentially 90, 87 to 89, two upsides. Now what's going to say that we're going up there? Well, as you know, I love fib levels, and I love them as confirmation levels, and I love the 236 fib as a confirmation level. And when we look at this on the weekly, this 236 confirmation level for me is at 74.16, and for 3 weeks in December we tried to get above it and couldn't. I think if we can close above 74.16, therefore we've got more upside, and looking for 88, 89, and potentially a back test of 100. It would still be a corrective bounce, but that's what I'm looking for. And it's been a little bit messy down here, I have to say. If I look at the shorter term swings though that we're in, and for a bottoming pattern here, I usually put my fibs on the whole big swing, but sometimes the shorter range here, it's all a little bit flat, isn't it? Start of the year we could go either way, so I'm looking for a lower time frame bottoming pattern to buy. I would be buying, anticipating a weekly close above 74.16. If we don't get it, that would be bearish. And underneath the weekly 200 moving average, any close underneath there, which comes in at 70, is really key support. If we don't hold it, I think that we could see a lot lower. Now, tensions dying down in the Middle East would help this stuff. Just the Red Sea, getting the Red Sea back. A lot of oil is moved through the Red Sea, and that's really quite disruptive, everything that's going on. It's not in itself a tension, but you know, it has the potential to get a lot uglier, let's put it that way. So very tight, narrow range, looking for a breakout below 70 in oil. I'm pretty bearish. Any close and hold above 74.16, and then above these weekly moving averages, I'm pretty bullish for a decent bounce. And yeah, 30% upside if we can above 74.16. I think there's a really good shot of a retest of $100. Okay, I hope that's useful. This currency effect that we talked about in the euro dollar is quite strong also in Bitcoin. Bitcoin did exactly that last year, made a low out of the gate in January, and it didn't even come back to think about retesting it until March. So it's a good thing to watch.